Welcome back to Power Lunch. With Disney set to report third quarter results on Wednesday before the bell, investors will be keeping a close eye on theme park revenue and streaming subscriber growth. Disney shares have jumped nearly 30% over the past 3 months, but the stock's recent run has cooled off as of late. It's falling about 4% over the past month. Julia Boorstin joins us now to break it all down and give her predictions on what we may or may not hear tomorrow morning on the call. It's so good to have you on set. Welcome.
It's great to be here.
All right. So is that it's parks and streaming?
Those are the two key areas of focus. And I think if you look at where Disney has made its big bets, it's really in these two areas. It was almost 2 years ago that Disney said it would be investing $60 billion in its parks and experiences division over the next decade. And here we are 2 years into that. And they have some new competition in Florida and Epic Universe at Orlando. So the question is that starting to impact the results? And what are the Parks and Resorts division and the exposure around the world seeing in terms of the strength of consumer spending and the bookings? How much are people spending at the park? What are they planning for the rest of the summer?
Pricing for the parks. I know that we had years of that going up and then consumers pushing back on it. Is that something that's been adjusted?
I think that the question is not whether the price increases are going to stick around. I think they're here to stay. The question is how much more are people spending once they're at the parks? Are people shortening the number of days they're going to Orlando because maybe they want to spend more time at Epic Universe? And what are we seeing elsewhere? What's happening in Paris? What's happening in Asia? So that's the key thing for the parks. And when it comes to streaming, the reason the stock saw such a pop 3 months ago when they reported is because they added about 1.4 million streaming subs instead of losing subs, which is what was expected. This time around, they're expected to add about 1.5 million subscribers to Disney Plus, and we're also waiting this new bundle. ESPN is launching its full streaming product. We're expecting that within the next month. We'll see how that bundle, ESPN combined with Hulu, combined with Disney Plus, really not only drives subscriber growth, but minimizes churn. Disney wants to make sure that its bundle of services, plus some perks they're now offering, really keep people locked in, so you have no reason to ever drop that bundle of 3 services.
And we've had those conversations about speculation of the end of the cable bundle with the launch of ESPN Plus. Overdone?
Well, I think there's going to be some bottom. I think there's going to be some limit to how low cable subs will go. There was some question, maybe it's around 50 million subs. We've also seen companies like Charter weave in streaming subscriptions to their cable bundle, and in a way that both bolsters streaming subs and also protects the number of people who are subscribing to the cable bundle.
All right, Julia Boorstin, thank you.